Hey guys, welcome back. Joe Brunsman here. Today, my predictions, the top 10 ways that cyber insurance will change cybersecurity in 2021. So let's go ahead and jump into it. All right, first of all, there's going to be much greater scrutiny given to both claims and applications. So what does that really mean? There's going to be really these de facto reasonable cybersecurity requirements. Most major cyber insurers are going to just blatantly request that these actually be put on. Why? They're not very expensive. They're fairly ubiquitous. So things like security awareness training, dark web monitoring, some sort of two-factor or multi-factor authentication is going to be very, very common. Lots of questions now being put out about backups and how those are verified and or monitored. And then we're also going to see a lot more of the network scans as well. So it's not just going to be putting together an application that looks really nice. It's also going to be these cyber insurers actually using network scans to see, hey, outside looking in, how secure does this business appear to be? And if you're not willing to just kind of put these basic measures into place, I think it's going to be difficult or very, very expensive for you to get cyber insurance. Number two, some industries not offered coverage. And I should be more specific, that's by many major insurers. So we're already seeing now that there are specific industries where some of the major players in the cyber insurance market, they're just not playing in that world anymore. So who would that be? So SMBs with some sort of high record count. And that could be, let's say, mid-sized medical practices. They have a lot of PHI on their system. Generally, they don't spend a lot of money on cybersecurity. And that could be for many, many reasons, but I'll hold there. But they're going to be having a very hard time finding cyber insurance moving forward. Also, we're going to see those that transfer large dollar amounts, so manufacturers. Or manufacturers could also have the potential for bodily injury, property damage. Those specific industries, they're going to be having a very hard time, and others as well. And then obviously those with just historically bad security, and that would be municipalities. They're going to be having a very, very hard time moving forward because we know that they are specifically being targeted. They don't have a lot of money to invest in cybersecurity. And on top of that, they generally have tens of thousands up to millions of records. So those industries are going to be having a very, very difficult time moving forward, which means that if they want to get the cyber insurance, they're going to have to spend a lot of money and really dig down on their cybersecurity practices. All right, next is going to be some coverage features are just going to be lowered or completely removed. So things like social engineering and wire fraud losses, cyber insurers are just taking a bath on these things. And they're just getting hammered with it. So it used to be, even a couple of years ago, you could probably get $1 million in coverage. Now it's looking at $250,000 if we're lucky. Generally, it's going to be $100,000. There's some ways around that if you know what you're doing, but it's very, very difficult to do that. Another coverage would be, there was kind of this brief window where we had betterment coverages here, where they would actually pay to increase the security of your system following a breach. That is pretty much going away. And then obviously ransomware payments. So companies, cyber insurance companies are just taking a bath on ransomware payments. And so we're already seeing some sort of endorsement there where that's going to be lowered. Compared to what we've traditionally seen in the past, you're not going to have full policy limits there. All that really means, you're going to have to watch out for all these kind of weird little endorsements that a cyber insurer could actually put on side of your policy. And that's just really going to mean that the cash that you thought you had or maybe you previously had in the past, that's just not going to be there, which means you're going to have to do more on the front end to try and lower the probability of that loss. If you are going to want some of these payments actually included inside of your policy, these policy features here, you're actually really going to have to show that you have true cybersecurity and it's really just part of how your business actually operates. All right, moving forward here, policy endorsements are going to be increasingly removed. And what do I mean by policy endorsements here? It's those small cyber endorsements that you're seeing on other types of policies. Those are going to start being taken off. Why is that? Well, one, they're just unprofitable for the companies that are doing this. These are other types of insurance companies, so some type of cyber coverage on a D&O or a professional liability policy. Generally, they're just unprofitable for these businesses to do that, so I think they're going to be taken away. Next is they're just annoying. So generally, more and more businesses now, it's becoming fairly ubiquitous that, good-sized businesses are actually holding standalone cyber policies. And so what's happening is you have these other types of insurance companies who really don't know anything about cyber insurance and cybersecurity law and how that whole process operates following an event. they're having to interact with the standalone cyber insurers. There's a lot of money there on the back end that has to go back and forth. It just annoys everybody. I promise you when I tell you that. So they're probably just going to be removing those endorsements. Next is they don't really offer anything you can't generally find on a standalone cyber insurance policy anyways, with a very, very few specific exceptions there. So I think those are going to be removed, and generally they're just not competitively priced for a small business. All right, moving forward, higher premiums. That's right. Cyber insurance is finally getting more expensive. So in the past, it's been who can charge for the cheapest policy out there, right? How many widgets can you put on the lowest premium that's available? That will come to an end. And maybe you could lower that with higher deductibles, but obviously what is a deductible or retention? That's an assumption of risk. And anytime you're assuming more risk, then obviously that's going to be an issue for your business, and you're probably going to want to mitigate that risk with some type of cybersecurity measures. There will still be some good deals available out there. We're still going to see some inflows from the venture capital side. I wouldn't necessarily agree with some of the economists that there's trillions sitting on the sidelines there. I think that's definitely a little ambitious for them to say that due to current economic conditions. And we're still going to see some minor players. They're going to try and come into the market, undercut the competition. It happens in every line of insurance, but just avoid those guys. All right, next, we're going to see higher deductibles as well. So obviously higher premiums, higher deductibles. The days of $0 deductibles or $1,000 deductibles, I'm going to say that's all going to end in 2021. Why? It's a moral hazard. When I say moral hazard, what I'm saying is the insurance company wants the insured, that small business or the medium-sized business, they want them to have actual skin in the game. And once that business actually has skin in the game, right, whether it's a $5,000 deductible, a $10,000 deductible, suddenly those reasonable cybersecurity measures that I talked about previously, or even some more advanced cybersecurity measures, such as adhering to a framework and going through that whole process, suddenly that's going to look a lot more tempting to spend money on that, because they're going to say, okay, well, premiums are going up, deductibles are going up, and let's say I'm going to have to pay 10 grand if something goes wrong here with my cyber policy. Yeah, I think I need these additional measures in place to try and hedge my bets against paying that deductible. Like I said before, we're probably going to start seeing, $5,000, $10,000 deductibles will probably be fairly standard there. The minor players, once again, they're still going to try and undercut the competition, but be very, very wary of that. All right, 7, validation of increased expenses in cybersecurity. I've kind of been touching on this the entire presentation there. I don't think that cyber insurance will be the default answer moving forward. So yes, I'm a cyber insurance guy. Cyber insurance has its place. I think it's necessary for every SMB and large business out there to actually be carrying an appropriate cyber insurance policy. But that being said, it's not just, hey, I'm not going to spend any money on cybersecurity because I can get this super cheap cyber insurance policy with like a $0 deductible or a $1,000 deductible and just move my way forward. So that is no longer the default answer. And I think what's going to happen is all of this combined, you're going to have more on the line for each of those insureds out there. They're going to really have to start taking cyber insurance and cybersecurity seriously. Obviously, this is good for the MSPs and the IT departments out there. Hopefully, your budgets start increasing and you guys can really advise these people appropriately. So, generally in my experience, I'll just say that the vast preponderance of breaches we're seeing, it's not a lot of fancy stuff. It's just people screwing up the basics. So, with that, just make sure the basics are taken care of before you get anything good. All right, long term, obviously good for the business, and it's going to be good for the consumer as well. So, at the end of the day, I think a lot of times we lose focus on the fact that cybersecurity is actually there to safeguard humans and the lives that these humans have. So when a business gets breached, it really is actual living, breathing people who are affected by this, often in very, very negative ways. And so, people get their identity stolen. They get credit cards opened in their name. Their credit score tanks. All of these things are the negative side effects of not having appropriate cybersecurity in place or not taking those threats seriously. So I think ultimately, yes, it's going to be a pain for the business. I understand that nobody wants to spend more money and take on more risk. Yes, I understand that they're probably going to have to increase their cybersecurity budget. But at the end of the day, I think it's actually good just for humanity as a whole that this actually moves forward and this trend continues. So increased adoption. So I think, fueled by lockdowns and remote workers, what we're seeing is businesses are finally, if they don't already have a cyber insurance policy, they're saying, hey, we need to get an appropriate cyber insurance policy. Some of those companies that have just kind of offhandedly, they're like, oh yeah, we got one. Now they're actually taking a hard look at it and they're saying, hey, we actually need to make sure that we understand what this policy covers, what it doesn't cover, and if there's any other possibilities out there of coverage that we can find. So businesses are starting to take it a lot more seriously. Unfortunately, on the insurance side, there's not a lot of good news out there. Unfortunately, definitely not in 2021, as there hasn't been for probably the last 5 years. And that's because, one, the average insurance broker is in their 60s. They built their book of business on D&O insurance or professional liability insurance or workers' comp or business owners' policies. They know absolutely nothing about this area. And that is actually very, very bad for consumers. At the very end of this book, or very end of this presentation, you can get a free copy of my book to try and help yourself out there. But these insurance brokers, I see a lot of egregious behavior out there where insurance brokers are just selling things willy-nilly, and it's very, very bad for the business at the end of the day. Obviously, it does hurt those SMBs for a multitude of reasons, and I think this is going to increase that distrust in the industry and also increase expenditures in cybersecurity. So what I think is going to happen is, kind of wrapping this all up into a neat little package here, is people are going to get cyber insurance, but they're not really going to be that comfortable with it because their insurance broker just probably doesn't know anything about it and cannot advise them appropriately. The fallout from that is going to be, okay, well, we're not super comfortable with this policy. We're not super comfortable this guy knows what he's doing. So at least we have something, but we don't want to rely on that cyber insurance policy. We really need to spend more money, take a harder look at actual cybersecurity budget itself. All right, number 9. The Solarwinds exclusion. I actually made an entire video on that. I will post a link up above if you want to learn about the 3 terrifying insurance implications of the Solarwinds breach. But needless to say, I think there's going to be a lot of Solarwinds exclusions being added to policies because the cyber insurance market as a whole has just completely freaked out. And they just have no idea where this is going. I don't think anybody knows where this is going. And it seems like every day it just gets worse. Wrapping up here, number 10, insurers will actually start getting serious about vendor security requirements. And this is kind of another correlation there to the Solarwinds breach. So there's a bunch of ways that businesses can do this. There are automated services out there. There's various security questionnaires that you can utilize. But I think this is going to be very, very much in the spotlight for cyber insurers moving forward. And I think it's going to be an easy reason to deny coverage there. So if you're not already getting serious about, that supply chain cybersecurity component, that is going to be a much more serious issue moving forward, because think about it this way. The cyber insurance industry has potentially billions and billions of dollars on the line due to SolarWinds. So anytime you have that much potential risk in the market, they're going to take a really hard look at that and see where it's going. All right, so moving forward here, I just say be brilliant at the cyber basics. As I said before, very rarely do we see a highly sophisticated attack. Normally, it's just people screwing up the basic things. So be brilliant at those basics. Work with your MSP or your IT providers. Make sure that you are working with those guys, understanding what they're talking about, seeing, what would be a reasonable investment to try and increase your cybersecurity posture. At the end of the day, you don't have to outrun the bear. You just have to outrun the other guy in many circumstances. So make sure that you're keeping up in that foot race and you are outrunning the other guy. Next is just make sure you get the right cyber insurance policy. I would not, unfortunately, trust your broker to do this appropriately because there's just not a lot of expertise in the market right now. Obviously it's because, generally insurance guys are much older. They're not particularly tech savvy. But then on the other hand, any of the younger guys, most of the younger guys last less than 2 years. And then on top of that, there just hasn't been a lot of money in the cyber insurance market. So the few of us that have actually, put thousands and thousands of hours into this, it's very, very rare. So make sure you actually dig into that policy. Don't just take anybody's word for it, even mine. Don't take my word for it either. Dig into that policy, make sure it's got what you need, it's got what you're looking for, and that you know the risks that are, that you can cover and the risks that you cannot cover. Next is going to be zero trust. As I said, don't trust me, don't trust this presentation, don't trust your insurance guy, don't trust anybody trying to get into your network. Zero trust is going to be even bigger in 2021. And obviously work with legal counsel if you're ever in doubt. All right, with that, if you enjoyed this presentation, this is Damage Control Cyber Insurance Compliance. You can get a free copy of my book at that link above. Also available on Amazon if you would like to support the cause and keep the wife happy. With that, my dog is currently whining at me in the background, so stay safe.